So it's 10 o'clock, and I wish you all very welcome to this webinar where we will discuss and listen to CEO Ed Bowie of Beowulf Mining. We have a time slot of up to 1 hour, and I think Ed will present for approximately 35 minutes, and then we will open up for questions after Ed's presentation. Evely is currently assisting Beowulf with a rights issue of up to approximately 83 million Swedish and a total capital raise of 104 million Swedish. Subscription period has started today and it's open until March 28th. However, trading in subscription rights is only available from today until March 25. Ed will update us on Beowulf's current position and activities and what we shall expect from the company in the near future. We have a chat function, Q&A, it's said on the screen, and you can enter questions there during the presentation, and we will address them after Ed has completed his presentation. So please, Ed, start your presentation. Thank you.
Great. Thank you very much, Lars-Olof. Beowulf Mining is a junior resource company focused on delivering raw materials to support Europe's transition to a green economy. We are listed on the AIM market in London and also the Spotlight market in Sweden, and we have about 80% of our shareholders based in Sweden. Hence the split in the capital raise that Lars-Olof just mentioned. We have three principal business units. We have Jokkmokk Iron in northern Sweden, which is focused on producing a very high-grade, market-leading iron ore concentrate that will have use in supporting the decarbonisation of the steel industry. We have a graphite business in Finland, and I'm actually speaking to you from the city of Vaasa, where I've been attending the Energy Week in Vaasa. Our graphite business is focused on producing a plant to produce material for the lithium-ion battery the lithium-ion battery industry, and we have a large resource in eastern Finland as well. We also have an exploration business focused on Kosovo, Vardar Minerals. It is earlier stage, but we're looking in very highly prospective ground for a range of base and precious metals. So in terms of the capital raise, we are doing both a rights issue in Sweden, which is underwritten, 50 million SEK underwritten, and we're doing a retail offer in the UK. Both give preferential rights to our existing shareholders to participate. As Lars-Olof said, we today have entered the subscription period, which will run for a 2-week period, and be announcing the conclusion of the capital raise and the result just after Easter. In terms of the use of proceeds from the fundraise, the majority is going to be focused on Jokkmokk Iron. We are completing a number of technical studies and environmental studies on that project to take it to the next level, and that is the primary focus of the primary work undertaken at Jokkmokk Iron. At Grafintec, we're doing similar studies and environmental work to progress the project to the next level. And the rest of the capital raise will focus a small amount on keeping Vardar ticking along. We have a small bridge loan that we will repay, and then we have some general working capital and overhead. So our main businesses are focused on the Nordic region, and there is a very good reason why we think this is a good place to be. It's partly due to the availability of abundant, renewable, cheap energy. and this is a factor behind the growth in the green steel industry. And our iron ore product is a suitable product for the green steel industry. Why is green steel important? Well, steel contributes about 7% of global CO2 emissions. Green steel can reduce that by 95%. It's not going to be a solution for the entire steel industry immediately, but it is a growing trend, and it's very much focused around Sweden, where there is plentiful, low-cost renewable energy, skilled workforce, and critically high-grade iron ore. So HC Green Steel is obviously developing their plant in Boden, which is 170 kilometers away from our project. They raised 1.5 billion euros last year, which was Europe's largest single equity raise, as well as significant debt. In addition to the green steel industry, we are also seeing a proliferation of gigafactories in Europe and in the Nordic region. And our graphite business is focused on supplying them with critical anode material. So we see the growth of that industry as being critical, and we want to play a part in that supply chain. So as well as providing materials to support the green transition, we also want to do it in a sustainable and responsible manner. We've adopted 6 of the UN Sustainable Development Goals. And we are also looking at a number of innovations and technologies to try and ensure that any impacts we have are mitigated as far as possible. So we're looking at, as an example, electric mining vehicles for the iron ore project. So first, I'll talk about Jokkmokk Iron. As I mentioned before, the value of Jokkmokk Iron is that it supports decarbonisation of the steel industry, and this is a significant trend. Currently, about 50% of steel is produced in blast furnaces. There is a move to electric arc furnaces, and then a further move to direct reduction steel. Now, electric arc furnaces and direct reduction steel both require high-grade, low-impurity iron ore, and that is why our product is important. There are plentiful low-grade iron ore projects, and the Western Australian iron ore is an example. It isn't directly applicable to electric arc furnaces or direct reduction without a further processing route. So there is likely to be a shortage of the high-grade iron ore, and that's where Jokkmokk Iron comes in. Our project is based in Norrbotten County in northern Sweden. We have defined 3 resources. The focus has really been on Kallak North. So in the map on the slides, the 3 red dots represent the defined resources. Kallak North being the top one. We have an exploitation concession around that resource, and we've done some economic studies and technical studies on developing that project. The green squares are our exploration licenses, and the blue circle, blue oval shape is the exploitation concession. We are in a good location, obviously with LKAB's operations about 100 kilometers to the north of us. There is a long heritage of iron ore production in this part of Sweden. We have a number of options for both rail, road, and ports, which we are assessing at the moment. So both on the Atlantic, the port of Narvik, but also ports on the Baltic. So the resource at Kallak North is 136 million tons, about 28% iron content. Our studies suggest we can upgrade that to about 69%, which is a market-leading product. We completed a scoping study in January of last year. That envisaged an open pit, followed by a processing route, which is very standard for the iron ore sector, the magnetite sector, crushing, grinding, magnetic separation, and then flotation. The scoping study envisaged a 14-year production life, producing about an average of 2.5 million tons of high-grade 69% iron content concentrate a year. The scoping study envisaged that 2/3 of that material would go to the blast furnace industry and 1/3 to direct reduction. Now, we are currently undertaking a lot of metallurgical test work, and we believe that we can produce more of the direct reduction material, which commands a higher premium. So I mentioned that we are well located for infrastructure and logistics. So we are about 100 kilometers south of Hällevaara. We are also close, we're 40 kilometers, 46 kilometers away from the Inlandsbanan in Jokkmokk. There is discussion about that being upgraded as part of the Sweden joining NATO, and we would be a clear beneficiary of that. Other alternatives are obviously using road or using the Malmbanan. And as I mentioned before, we have access to both the port of Narvik and ports on the Baltic. So we completed the scoping study in January of last year. We initiated a number of environmental baseline studies. So we're looking at nature values, biodiversity, noise measurements, air quality, water, and a whole range of cultural heritage sites. And we're doing a lot of engagement with local communities. That work is ongoing and will conclude with the completion of the environmental impact assessment later on this year. The process then goes into an environmental permit application process, which will take a few months, and then that application will be reviewed. And that process is expected to take between 1 year and 2 years. In parallel with that, we initiated a pre-feasibility study. So it's taking the scoping study and refining and upgrading the information in that study. We appointed a group, SLR Consulting, to lead that study, but we have a number of independent consultants focused on specific elements. So that study is underway, looking to refine the technical elements and the economics of the project. And as I mentioned before, metallurgy is critical, demonstrating we can produce a very high-grade concentrate. And so that work has been initiated and is ongoing now. The scoping study generated some base case economics, a net present value using an 8% discount rate of 177 million. Now, I'll explain how that was calculated. Essentially, it used a 14-year mine life. It assumed 2/3 production would be for blast furnace and 1/3 for direct reduction, as I mentioned earlier. And it then applied a premium to a benchmark iron ore price. Because we're producing 69% iron ore concentrate, it's very high grade and commands a premium. The benchmark that was used was 62% Fe, iron content, and a price of $80 a ton was used. Now, $80 a ton is extremely conservative. The 3-year average price has been $135 a ton, and therefore, just simply applying that that benchmark price and inflating the product prices by the same premium, we would derive an NPV of 895 million. So a very significant upgrade. We have other opportunities to enhance value, so we can produce more of the DR product, which is a higher premium product. But also we have seen differentiation in the market in recent years where the high-grade products are commanding a higher premium than previously. So I think there are 3 opportunities. The benchmark price should be higher. We produce more of the high-grade DR product, and the premium for both products will also increase. All that will be factored into the pre-feasibility study. So now I'll move on to Graphintech, our graphite business in Finland. The key driver behind our business is the growth of the lithium-ion battery industry. The production of lithium-ion batteries is expected to increase by tenfold by 2035. And with that, there's going to be a tenfold increase in graphite demand. Now, the graphite is a critical raw material. It has been defined under the EU's Critical Raw Materials Act as a critical and strategic raw material. The intention of that act is to see 10% of production coming from within the EU and a further 40% of processing capability coming from the EU. At the moment, we don't produce any and we don't process any, or we produce a very small amount of graphite concentrate, but there's no processing capability. So our business is really focused on trying to develop that supply chain and ensure supply chain security. We have a site reserved in Gigavaasa Industrial Hub in the city, just outside the city of Vaasa. We have extremely good support from both the municipality of Korsholm and the municipality of Vaasa in developing our business here. In addition to the downstream processing plant, we have a number of exploration projects. The most advanced is Aitalampi in eastern Finland, and there we have one of Europe's largest flake graphite resources, 26 million tons at close to 5% graphitic content. We have significant potential to increase that resource, but we also have other projects that could significantly grow our resource base. However, the real challenge for the graphite market at the moment is not supply of raw material, it's the downstream processing. So our initial focus is on the anode plant, and we'll look to incorporate the production from our own mines in due course, but that is a second phase in our strategy. So the anode materials plant it's basically a three-stage process. We will import initially graphite concentrate, and we have an LOI in place with a company to provide that material. Then the process is spheronization, purification, and coating to produce the final spherical, coated spherical graphite used in anode manufacture. In the summer of last year, we completed a pre-feasibility study on the coating phase, and at that point, our intention was to build the plant in stages, initially with the coating, and that's why we did the study on that element. China controls 99% of the spherical graphite refining, which is the key component to go into the coating plant. And with the introduction of export controls in December of last year on graphite products, we took the view that we needed to secure supply chain across the whole process route, and therefore we're enhancing and updating our pre-feasibility study to incorporate the three stages. That work has been initiated. We're using a German group called Dorfner Anser Plan, and we will complete that during the course of this year. Simultaneously with the development of that pre-feasibility study, we are doing environmental impact assessment work at the moment. And again, that will conclude during the course of 2024. Next year, we'll do a feasibility study on the anode plant, and we'll go through the environmental permitting process. The site of Gigavaasa already has some overarching environmental studies completed, and we do not anticipate that the environmental permit process will be too lengthy. We think it'll take a maximum of 12 months, so that we'll be in a position to build the plant in 2026 and potential production in 2027. In terms of I'll just go back a slide. In terms of the process that we're using, it is most production is in China at the moment, and most production uses hydrofluoric acid. One big difference with our process is we're looking at sodium hydroxide for the purification stage. So it is a far less nasty product than or chemical than hydrofluoric acid. So a much greener production route than the Chinese currently use. So a quick word on our deposits. I mentioned that Aitolampi is one of Europe's largest flake graphite resources. The top map illustrates the Aitolampi resource. So the pink colors are electromagnetic anomalies. These indicate graphitic material. There are black dots, if you can see on the slide, which are drill holes, and the hashed area is the defined resource. So we have pink areas that are outside that defined resource. They simply haven't been drilled, so there is potential to grow that resource significantly at Aitolampi. The map below is Rapisjärvi, which is 8 kilometers down the road from Aitolampi. There is a significant electromagnetic anomaly, so indications that there could be a similar volume of material as at Aitolampi. And critically, Rapisjärvi, the grades that we have collected from trenching, sampling on surface, a number of them have been significantly higher than those at Aitolampi. So we are confident that we can grow our resources significantly. We've done a fair bit of test work on our material to demonstrate, one, that it can be concentrated to a high enough concentrate for the anode material plant, and then further that it would go through the plant and produce anode material. And our tests to date, they are ongoing, but our tests to date suggest that both projects can produce very product that is amenable to anode production. So our third business is Vardar Minerals. Vardar is focused on Kosovo, which is in the heart of the Balkans, and sits within the Tethyan metallogenic belt. This is a major province with a number of world-class deposits, some, truly very significant on the world in global terms. One that I would flag is Rio Tinto's Jadar project in Serbia. This is a lithium boron project, and Rio Tinto is having some permitting challenges with it. But the significance is it is large and high grade. So we are in a very good location. Kosovo has seen very little exploration since the 1980s, but is highly prospective. Our licenses in the north of the country surround the Mitrovica area and the town of Mitrovica, and in particular the Stan Terg mine. Stan Terg is a lead zinc mine still in operation, run by the state, but in decline. It's been undercapitalized for many years, but it was one of Europe's largest lead zinc mines for many years, and our licenses surround it. The significance of that is that during Yugoslavian times, the focus of exploration was on finding more lead and zinc to feed the significant metal refinery and processing capabilities in Mitrovica. They weren't looking for other commodities. So we've been very systematic in our approach. We've done a lot of reconnaissance mapping, surface sampling. We also fly drone magnetics and identified a number of targets. Now, the area has huge metal potential. There's very significant hydrothermal alteration throughout the area. And so there's a lot of targets to go for. We have spent a lot of been invested in Vardar in 2018, and so we're systematically working through the target. We've done a bit of drilling on the Mitrovica license and got some very interesting hits. No discovery hole at this stage, but the key thing is we're finding not only lead and zinc, which is what we would expect, but we're also finding significant copper and precious metals. We also have a license package in the east of the country, the Viti licenses. There in the east of those licenses, we have anomalous copper and gold. And then the Viti North license, the image that you can see some brown splodges. Now, and a circular structure. That is an ancient basin structure. Now, the geological setting that we have here is similar to Rio Tinto's Jadar project, which hosts a world-class lithium borate project. So we have done a bit of sampling. We have sampled spring water, and samples have returned highly anomalous lithium and boron. So it's early days. We haven't done any drilling, but indications so far are that we have a potential to make a discovery of a lithium boron project. A very quick word on some other projects that we have. So the focus in Sweden is on the Kallak North project. We also have two southern Kallak deposits, both of which with defined resources. They've had less drilling and less studies undertaken on them, but there is potential to grow those resources and indeed join the mineralization between them. There is further exploration potential to the south of the license area, and we recently announced the award of a new Parkyar 8 license, which the magnetic signature suggests that the mineralization continues into that license. We also have some exciting copper exploration targets. We are processing the results at the moment, so we would hope to release an update to the market soon. In Finland, I mentioned that we have the Rappisjärvi project close to Aitalampi. We also have a very interesting cobalt nickel project that we picked up. It was a project that was discovered by the Geological Survey for Finland. So again, we've done some sampling. We're going to analyze those results and look forward to updating the market in due course. We are also considering other opportunities, particularly in the Balkans. There are a number of developed projects in Kosovo in particular that are controlled by the state at the moment, but are receiving no funding at all. They're more advanced than the targets that we currently have. So we're in discussions about potentially acquiring those, bolting those into Vardar to give Vardar a bit more critical mass. So looking at a number of other opportunities, but only if they make sense. So in summary, we have a number of interesting projects in critical commodities. So we have Jokkmokk iron, which has the potential to produce a leading iron ore concentrate for the green steel industry. We have one of Europe's largest flake graphite deposits and are looking to build a downstream processing plant for the battery industry. And in Vardar, we have the potential to make a significant discovery of base or precious metals. Our location in the Nordic region gives us a key advantage, access to low-cost energy, our downstream markets, and also skilled workforce. And then we see a number of moves globally. So the export controls on graphite that the Chinese introduced being an example, but also the EU Critical Raw Materials Act that we think will help to drive the value of the commodities that we're operating in. We're also seeing significant investment, not only in green steel production, but we're also seeing car manufacturers investing in battery commodities. So we think that now is a great time to be investing in Beowulf. We're looking, we've got a lot of work to do over the next year, but we hope that the capital raise will put us in a position that we can move forward at pace and deliver value on all our projects. Thank you very much.
Thank you, Ed. And please enter any questions you might have into the Q&A session or chat, and we will forward them to Ed. And if I can just start, we have been waiting for a long time to see new mines being open in Sweden for different, I guess, political and processing reasons for getting permits and so on. Can you see any changes in the attitudes politically and process-wise in Sweden over the last period, Ed?
I think that's a key question, and I think the answer is definitely we are seeing significant changes. I joined the company in August of last year, so haven't been involved prior to that. But the company initially applied for the exploitation concession for Kallak in 2013. It only received the exploitation concession in March 2022, so a 9-year period. The exploitation concession was the award was challenged both by 2 Sami villages, but also the Natural Conservation Agency, and the decision to award the license was challenged. There was a court hearing in the Supreme Administrative Court in September. The lawyer representing the Sami villages subsequently made a further submission to the court, and so the government was asked to respond to that. On the 18th of January of this year, the government responded with an incredibly supportive response and very positive response for us. So their response fully endorsed their original award of the exploitation concession, and went further to say that Kallak was a project of national interest, and in a very comprehensive submission, they addressed all the concerns raised by the applicant in the case. So I think there is no doubt that there is government support. Clearly, there are people that are against mining. We know that the Sami are generally against mining activity. And we are very focused on trying to build trust and engage in dialogue with local stakeholders, with the Sami, to basically become part of the community, tell people what we're doing, and be very transparent, so that we can educate everybody about our plans. We have opened an office in the town of Jokkmokk, and we recently announced the appointment of a project director, Dmytro Sergeyev, who is based in northern Sweden, will spend a lot of time in Jokkmokk. And obviously one of his key roles is to start to build that local stakeholder trust. So we've still got work to do, there's no question about that, but we've certainly changed our approach, and we've been very proactive about trying to manage the process going forward. But in terms of the overall political landscape, there seems to be very strong political motivation to see more mining projects advance and receive permits.
Thank you. Some of the companies you mentioned, H2 Green Steel and other junior miners and so on, have concluded some form of offtake agreements well before they have started to produce anything. Could you elaborate a little bit on what's the pro and con for doing that early versus later?
Absolutely. So I think offtake agreements will form a key part of a financing package for Kallak. But the question is really, when do we introduce them? As I mentioned earlier, we are doing a lot of metallurgical test work right now to really demonstrate that we can produce the high quality product that our initial test work suggests we can. Trying to negotiate offtake agreements before we've got the results of that test work would be premature, for one thing, but also if we do it too early, then we're actually likely to give away too much value in the project. So it's a balance. We have had a lot of interest from trading companies, from potential off-takers in our product and in the project and development of our project. So I think there will absolutely be appetite, but we have to we need to manage that and do it at the right time. We will continue to have those discussions, and but you know, until we've completed the pre-feasibility study and we're into the next phase, I think offtake agreements, it's too premature.
Thank you. I understand that not only natural graphite exists, but a vast volume is also produced synthetically. Can you explain the difference, and why is natural graphite needed if we can produce it synthetically?
You're absolutely right that there are the two types of graphite. Anode materials currently use a combination, a mix of the two. And the forecast that we see, the market expectation is that the amount of natural graphite in anode material is going to increase over time. So that we would be a beneficiary of that. Synthetic graphite is made it's essentially made from the hydrocarbon industry. It requires a lot of energy. It is expensive. The benefit of natural graphite is it's lower cost, and you can do it in a more environmentally friendly way. So that's one of the drivers. Longer term, our expectation is there's always going to be a requirement for a bit of a mix. They have slightly different properties, and combining the two properties sort of optimizes the anode in the lithium-ion batteries. So there will continue to be a blend, but we see that blend moving more towards natural graphite, that which is obviously what we're trying to produce.
Thank you. You have 3 different areas of business: the Jokkmokk Iron, the Graphene Tech, and Vardar, and they, of course, all require relatively large capital expenditure if they should all be developed as you would like to. How do you foresee to solve the capital requirements for those areas going forward? I assume that all of it, doing it alone, would be difficult.
That is absolutely correct. So at the moment, our focus is on raising completing this capital raise, and that will get us to complete the pre-feasibility studies on both Kallak and the anode material plant. Once we have done that, we will have underpinned the technical development and the value of both those projects. So it's a critical milestone. It also would be a juncture where we can talk to strategic investors or strategic partners. So at the moment, my view is it's a little bit too early to look to do that. But I think as soon as we've completed those pre-feasibility studies, then the timing is better. I would say that with Vardar, I should have mentioned earlier, we previously owned 61% of Vardar. We announced that we have reached agreement to consolidate 100% of Vardar. We announced that earlier this month. That transaction has not completed, but it's agreed, and there is no reason to, it will complete within the next couple of weeks. The reason we are doing that transaction is to give us full control. It also gives us optionality to either bring in additional projects, as I mentioned earlier, or look to divest Vardar to a partner, or indeed spin it out with some other assets. So we're looking at all options for all our assets at the moment. Clearly, funding all 3 into production is unlikely to be something that Beowulf does, but we will assess our options as we move forward.
Thank you very much. Do we have any additional questions from the audience? I can't see any, so by that, I would like to thank everybody for your keen interest in this, and thank you, Ed, for a good presentation, and look forward to seeing you all as shareholders in Beowulf in due course. Many thanks. Bye-bye.
Thank you very much.
Thank you.